Welcome to another video of Small Business Treasury. Today I want to go over this article that was written by ABC Bank. It's called Treasury Management Services for Small Businesses. And Treasury Management is just corporate lingo for cash management. Treasury is just a proper terminology that is used in corporations to describe what cash management is. And cash management is just simply the ability to move cash throughout your business on a day-to-day activities, and that can mean anything from receiving cash from your clients to dispersing cash to your vendors and anything in between. So without further ado, let's jump right into it and look at the 5 signs that your small business needs treasury support. So whenever you see the word treasury, I like to encourage the founders and CEOs of these small businesses to just replace that with cash. It's cash support or cash management. That is the most friendly terminology that it can be used to describe what treasury is. So if we look down, we can scroll down to where it says, what is treasury management? And treasury management is just a suite of banking services that enables businesses to manage their finances more effectively. So these services help eliminate and streamline things such as payments, monitor cash flow, improve security, forecast future financial needs. That's what treasury management encompasses, or in other words, cash management for your small businesses. So one of the first things that they offer in the treasury suite is cash concentration and disbursements. So this is a very, very common feature used in large corporations, especially large corporations that have multiple bank accounts. You know, the organization that I'm employed in, and we manage over 125 bank accounts. So being able to consolidate those accounts into uh, single purpose use, or certain having accounts that are for specific needs such as payroll or tax, those are all forms of different reasons why corporations have multiple bank accounts. So the cash concentration and disbursement account is a feature that many corporations use. And that simply means concentrating your cash into a single account so you can have greater visibility and overall liquidity management, right? So, for example, if you have a large corporation or medium-sized corporation and they are collecting cash from multiple bank accounts, maybe through various business units or different divisions around in the organization, a lot of that time that cash has gone into individual bank accounts. But is a treasury individual or a cash manager individual or CEO or founder who is responsible for the daily liquidity and uh, optimization of your cash, one of those features that is offered by banks is cash concentration. So you're able to concentrate all of that cash into a single account, just so you can see the overall liquidity that you have across all of your bank accounts. So that's one of them. And a cash disbursement is just another fancy way of saying we have an account specifically dedicated to disperse cash. So the most common used in this cash disbursements in large corporations is payroll. Each payroll account or each organization has their own individual dedicated account that is used to pay payroll. And the way that it functions is you have your concentration account, which is the account that all of the cash is concentrated in. And then you have your disbursement account, which is usually a zero balance account that is specifically for payroll. And what ends up happening is you can request this from your banker, or in contacting the bank or the point of contact at your bank for small businesses to offer this is in your small business treasury. You can request that you have a payroll account that disperses cash only, that is remained at zero balance at all times. So the way that it does is most treasury suites and most corporations, they'll have a payroll account that disperses cash. You'll see that it goes negative, and then that cash is usually fulfilled by the concentration account. So that's why it remains at zero balance every single day, because you disperse cash from it, it goes negative, but then it's fulfilled with the concentration account. So that is a feature that is used, that is very, very important for small and growing businesses. This is something that helps create a clarity between specific payroll disbursements, which can be very useful when you're doing your financials and your reporting, And then you have your cash concentration, which is used whenever you have multiple accounts that receive client funds or client deposits or anything like that. So that's one of the features that is available for treasury management or cash management services at your local bank. The next one is ACH payment and wire transfers. This is very common. It's one of the first things that most small businesses should look into when they're upgrading their treasury services. ACH payment and wire transfers, they are very different. ACH usually takes between 1 to 3 business days, depending on the bank. Wire transfers, on the other hand, are very time sensitive, and they settle in real time. So they can settle between 15 minutes to an hour, just depending on the bank that is receiving the funds. But once you initiate a wire, it's usually processed within 15 minutes from your local bank, and then another hour to 2 hours, depending on the bank that is receiving those funds. So if it's time sensitive, a wire is most likely the more ideal situation. However, this is irreversible, right? So that's a topic for another video. But wire transfers are irreversible, and you cannot reverse them once they've been initiated. ACH payments, on the other hand, they may take longer, but you can reverse those transactions if needed. So that is one of the most important features whenever you're starting off in your business. But as your business continues to develop into larger size, more employees, more bank accounts, tens of hundreds of thousands in deposits, you want to upgrade these features to be more sophisticated and more tailored to your needs, something that your banker will be able to assist you with. The next one is fraud protection tools such as positive pay and ACH filters. This is a topic that we can go into for many hours, because these are some of the most important features whenever your organization is growing. One of the most common forms of fraud whenever organizations start having some momentum, they start appearing into the local news, or they start being appearing into some sort of local reputation about growth, is many times some individuals are vulnerable, or some organizations are vulnerable to being victims of fraud through checks. So if an organization has checks that are used to pay vendors, and at one point or another those checks are leaked to some sort of black market, or to the public, or to your internal staff, now you're exposing your check information, your bank account information, to various sources out there. I've seen many times where internal staff sell these banking information, bank accounts, to the black market, and those people attempt to pull funds from those checking business accounts. So positive pay and ACH filter is one of the most important features that you can request as a growing organization to help protect the cash in your account. Positive pay is a form of check protection. So whenever you have an issue a check, many times you can come across people who will try to intercept that check, try to remove the original beneficiary, replace it with their information, and then it would look like the business is writing a check to that individual. That is what's considered a fraudulent check. So a feature that most treasury products offer from the bank is that you can upload a positive pay file. And a positive pay file is just a fancy word of saying you're alerting the bank that you have written this check. It includes all of the information of who you're written it to, the date, the amount, and this informs the bank that if any of those information that is not included in that file is mismatched, whenever someone who attempts to cash that check, they will alert you and say, please review this check that is being attempted to be cashed. For example, if you upload a file that includes that you are paying John Doe for $1,000 on this date, and the check number is 12345, and then 2 weeks go by, and then the bank is notified that that check number for that amount for that date, but it has a different name than John Doe, is presented to be cashed, that's what is called a positive pay mismatch. And the bank will alert the individual who is responsible for the banking platform within your organization and ask you to verify, hey, this doesn't match the file that was presented to us through a positive pay. It looks like someone's attempting to cash a check that doesn't belong to them. Can you please verify? And if it's approved, you can go ahead and approve it. If not, you can go ahead and reject it. That is what is called positive pay fraud protection for checks. It's one of the most important features, especially for an organization that writes a lot of checks to vendors. You want to ask that to your banker to implement that, to make sure that whenever you're writing checks, and if for some reason those checks are leaked or those bank account information is leaked and someone attempts to cash a check that isn't valid, that your treasury system and protocols that are in place will protect that cash that's sitting in your account from preventing it from being cashed to someone that doesn't belong to. So positive pay is one of the fraud protection tools. The other feature is ACH filters, and that works exactly like positive pay. The only difference is for ACH. So an example of that is if someone leaks your banking information, your routing, and your bank account number, and someone gets a hold of that and they attempt to debit your account through a fraudulent transaction, if your organization does not have proper treasury protocols in place to prevent fraudulent ACH filters or fraudulent ACH transaction from debiting your account, you are at risk to being at losing capital from someone who has gotten a hold of your banking information. So if your banking information for your company is leaked out there, someone attempts to debit, and there's not an ACH fraud filter on that bank account, they can for certain debit that account, take your money, and then there's nothing that you could do at that point to reverse it. If it's an ACH, if you catch it soon enough, you may be able to contact the bank and say that it was an ACH fraud. But if you are not in day-to-day activity as your banking portal and you catch it many weeks after, there's nothing that you can do at that point. So then you're fighting legal battles with the bank. You're trying to recover those funds, whoever debited your account, and that was because there was not ACH fraud filters available. So what ACH fraud filter does is that you are able to add approved vendors in your banking platform to show that whoever attempts to debit your account, their vendor ID must be added in the bank for the transaction to go through. So a very common one could be, maybe you have a utility company that debits the account every single month. In order for them to make sure that the ACH transaction is not rejected, you have to add their ACH vendor ID in your banking platform. So whenever that vendor attempts to debit your account, it goes through smoothly. Now, but it also works to protect you. If someone gets a hold of your banking information and they try to debit and their ACH vendor ID is not added as an approved vendor in your banking platform, it'll get rejected. So that's a feature that is used to protect your cash within your business checking account, and those are fraud protection tools offered by the bank. Another feature that is very, very common in corporate treasury or cash management is remote deposit capture. This is very, very common in large organizations, especially large organizations that run several checks on a weekly and monthly basis. And essentially, if you're an organization that has several checks that are being processed on a weekly basis, you may benefit from a remote deposit capture. And essentially is a check scanner that allows you to deposit checks from your desk without having to go to the bank and handwrite each individual one. You would take your stack of checks that you have, maybe it's 10, 15, 20 checks, and instead of going to JP Morgan Chase or Bank of America or your PNC or whatever local bank that you use, you have your check scanner that allows you to scan those checks and you'll deposit those checks directly into your bank account. It's a more sophisticated way of like a remote deposit capture from your phone using your mobile device. This is just more specific for small businesses and growing businesses. So the remote deposit capture is very useful when it comes to organizations that process multiple checks on a weekly basis. And instead of wasting valuable time going to the bank to deposit that and speaking to the teller and waiting in line and going in traffic, you're able to deposit these checks through your scanner, and it's very, very, very convenient and allows you to focus more on your business strategy rather than wasting valuable time on going to the bank for these types of deposits. Another feature that is very, very common for growing businesses is sweep accounts and liquidity optimization. I will be making a video about this in the future, but this is some of the most valuable bank structures that you can have in place for growing businesses. In our organization, we have several bank accounts and we do sweeps. Now, some organizations do a manual sweep. They manually sweep the excess cash from those bank accounts. Some organizations, depending how sophisticated it is and how sophisticated the bank is able to implement this, they do an automatic sweep. Those automatic sweeps was referred to as ZBAs, or zero balance accounts. It'll essentially sweep all of that excess cash at the end of the day and move it into a money market fund. So you're collecting interest on your excess capital. Now, that is a feature that's dependent per bank and tailored to the client. Most growing businesses don't need to get to an automatic sweep. They can do a manual sweep, and that allows for the accounts to sweep all that excess cash and optimize your liquidity. So liquidity optimization is just basically another way of saying being more optimal in your available cash in your bank accounts. So, for example, one of the most common ways that our sweep accounts and liquidity optimization is used in small businesses is, let's say you have large deposits that come in on the 15th of the month and you don't have any large disbursements until the end of the month. So now you have about 2 weeks of excess cash in your bank accounts that is not being optimized. It's just sitting there idle. So most organizations, in order to take advantage of that idle cash, they move it into what is called a money market fund. And that money market fund is just another way of saying it's a high yield savings account that is accessible daily and is specifically for businesses, right? So each bank should have their own form of the daily liquidity money market funds, and that's very important because you don't want your cash to be locked up, but you want it to be able to collect interest on a daily basis. And those usually, if you analyze the interest rate, it's somewhere between 3 and 4%. Obviously, the larger the balances, the higher the percentage, but those are small ways where you can optimize your idle cash, and rather than just sitting there in your business checking account for about 2 weeks without much interest being collected, you can move it into the money market fund and collect an interest on that balance. So it's another way that the treasury professional in your organization, or the CFO, or the C-suite, finance, the department head, or anybody who is in charge of the overall liquidity management, cash management within the organization, and you as a CEO and the founder should be aware of, is how to optimize that idle cash, right? Those are very, very important features as a business that you can tap into to make sure that you're capitalizing a lot, as much as you can, on those idle cash and excess cash sitting in your bank accounts. All right, and then receivables acceleration is essentially saying all of these features combined into one, optimize your liquidity for your business. So having remote deposit capture allows you to deposit checks faster. Being able to have sweep accounts allows you to capitalize on idle cash. Being able to have fraud protection tools such as Positive Pay and ACH filters allows you to protect the cash that you work so hard to get. So all of these features in working together is what helps optimize your treasury function and your treasury processes within your organization. So again, treasury, I like to emphasize the importance behind preventing cash from being mismanaged, and protecting the capital that you work so hard to get, right? So treasury is not something that is exciting. It's not something that that many people focus on in the beginning, but it is something that you can implement early on to make sure that you protect the capital, to protect the cash, to make sure you're not being victims of fraud, to make sure that nobody has full control over the bank accounts. All of these features are very, very important. Is the basic They're the basic features of treasury management. Every bank should have access to all of these features. Every single major bank definitely will have access to these features. So these are ways that you can optimize your treasury function, your treasury department within your small business or your growing business, right? So this is treasury is not something that is specifically limited to just large organizations and large corporations and billion-dollar corporations, but it's also not something that should be ignored for small businesses. It's something that should be implemented fairly early in your business to make sure that you're not reacting in the future, but you're being proactive and preventing things from happening. So that is all for today. I'll have more videos on each of these specific topics going into further detail, but hopefully this gives you an idea of the importance of making sure that you have the basic treasury products available and implemented into your small business, and making sure you're protecting that cash, you're protecting the cash within your business, and making sure you don't become victims of fraud and anything that may hurt your business in the long run. That's all for today.